Hello, I'm Ernie Humphrey, the CEO of Treasury Careers. I'd like to thank everyone for taking the time to join us for our webinar today, Payments Optimization, Mastering the Dance with Your Suppliers. I would like to thank our sponsor, Mineral Tree, whose strong commitment to thought leadership helps us make this webinar possible today. Advances in technology are motivating companies of all sizes to give accounts payable the attention it deserves. However, many companies still struggle in conquering the last mile of accounts payable, payments optimization. Historically, companies have paid suppliers by checks and have not taken much control over how and when they pay suppliers. Electronic payments offer companies lower payments processing costs than checks, and commercial cards offer lower payments processing costs and can offer rebates. Today, we will debunk common myths associated with switching suppliers to e-payments and discuss the specific benefits receiving e-payments can offer your suppliers. You will also learn how companies are collaborating with accounts payable automation suppliers to optimize how they pay suppliers to realize lower processing costs, mitigate payments risk, improve productivity, and in some cases, earn commercial card rebates. Before I delve into the content, I'm going to offer a few quick words about Treasury Careers, cover a few housekeeping items, and then I'm going to review our learning objectives as they are our value proposition to you for spending your valuable time with us today. Treasury Careers offers content and resources that empower Treasury professionals to own their career success. Our sister company, TreasuryJobs.com, only has Treasury Jobs opportunities posted, a fantastic resource. We also offer Treasury certification resources, Treasury best practices, and complimentary webinars like the one you are on today. The exciting housekeeping items. The slides are currently available under the handouts area in your GoToWebinar control panel. Any of you interested in CTP credits, you'll have to answer all polling questions and remain on for the duration of the webinar. Questions on CTP credit, please send an email to ernie@treasurycareers.com. We'd like to hear from you, so please ask your questions at any time in the questions area of your GoToWebinar control panel. I'll do my best to get to your questions at the question and answer session at the end of the webinar. Fear not, if I do not get to your question, I will follow up with you directly after the webinar. Finally, we appreciate your consideration in taking a short survey at the end of the webinar, as we always strive to improve the ROI we offer our event attendees for their valuable time. Now, what's our value proposition to you today? We want you to be able to understand how to leverage an AP automation solution to collaborate more effectively with your suppliers and take more ownership of how and when you make payments. We want to debunk common myths relative to barriers in converting suppliers to electronic payments and to understand how companies are collaborating with AP automation solution providers to convert suppliers to electronic payments. How are we going to accomplish our learning objectives today? Well, we're going to start out with the evolution of accounts payable, which has been amazing to me to watch over the past 2 years. So talk about why it's receiving so much attention, and it's great that the companies are paying so much attention, but I still think many companies aren't really taking full advantage of unlocking the strategic value of accounts payable, which absolutely includes payments optimization. Now, we'll talk about how automation facilitates collaboration with suppliers. Now, if we're going to be able to dance with our suppliers, we have to have good relationships with our suppliers. So one of the things that I'll talk about is that we have to be ready to dance with our suppliers. So what are the things that we have to do internally in our companies to be ready to dance with our suppliers? So we'll talk about that quite a bit. So we'll talk about being ready to dance, how you dance, and then also at the tail end, we'll talk about it might be good for you to engage someone to dance in your place. These AP automation and e-payables providers are offering tremendous value to many companies in helping convert company suppliers to electronic payments. We'll talk about the cost of payments by payment type, and that will lead us into our discussion of looking at your payments type portfolio. So really, if you look at it at a strategic level, what you should really be looking at is optimizing the types of payments that you make to your suppliers. So I'll go over a framework to do that, and then we'll talk about how you might set targets and then how you might reach those targets. And reaching those targets might be a multi-step process. And then we'll talk about some myths and realities of converting suppliers to electronic payments. and then we'll talk about strategies to facilitate electronic payments adoption, and then we'll offer some closing thoughts and some resources as well. You'll see throughout the presentation I have references to several white papers and resources. There are a tremendous amount of great resources in this area and great research, so I encourage you to take a look at least one of those articles. And one of the objectives that I have for all my webinars as a speaker is to have everyone who attends the webinar take an action. So if one of those actions is for you to click on a link and read one of those white papers, that would be fantastic. Reaching out to myself would be a great action to take, or reaching out to our webinar partner, MineralTree, to learn more about how you can optimize payments at your company. So again, a big objective of mine is to get you to take an action. Another objective, which I have today, is I want this webinar to be a little more interactive than normal. So I'm going to warn you, we are going to have more polling questions than normal. So you are going to have to be on your toes for those polling questions today. So in terms of the evolution of accounts payable, I just like this graphic from Martin Partners, the State of ePayables 2016. Again, the hyperlinks there. Interesting study. Historically, especially when I was a treasury manager back in the day, AP was more of a back office. And then we start to saw a transition to where it was a point of collaboration. And then I think over the past few years, what you've seen is this transformation to a true intelligence hub as companies have really started to focus on owning the cash conversion cycle, mitigating processing cost, optimizing optimizing the experience of their suppliers, and really paying more attention to optimizing those supplier relationships. When I used to work in manufacturing, the relationships with our suppliers were just as important as relationships with many of our customers. So I think that's going to continue to be a strategic focus. And then just some proof around how accounts payable has really evolved. Interesting survey results from another Ardent Partner study, the State of ePayables 2017. Some encouraging information on this slide for me. 45% of respondents view accounts payable as very valuable, highly involved in financial operations. I was glad to see that we have a small yellow piece. I'd like it to be non-existent, but 13% little value AP back office function. I think we've come a long way. Again, especially over the past few years, what I'd like to see is a bigger piece in that 11% exceptionally valuable, serves as a key hub, supporting many key objectives. And then one of those key objectives is what we're going to talk about today. Payments optimization, optimizing working capital. You can impact productivity across the enterprise, and you can really influence, again, that working capital optimization. So as we start to get visibility into it, peel back the onion, there's a lot of areas where accounts payable can offer strategic value, and we can see that companies of all sizes are starting to realize that value. And then kind of supporting statements here. This shows where we've come, put some more statistics behind it. Really glad to see. I mentioned influencing cash and corporate liquidity. It's fantastic as we get more visibility, especially through AP automation. We're able to improve our cash forecasting. We get that visibility. We're able to take those supplier discounts, maybe negotiate those discounts. Supplier relationship management, again, talked about that. A good supplier relationship is going to be key in our ability to dance effectively with our suppliers. You just think about it. If you're going somewhere and you want to dance with someone, isn't it much easier to dance with someone if you have a very good relationship? You know them, they know you, rather than trying to go up and ask someone to dance who you have some animosity towards. It's just kind of an awkward situation. So you really want to work on managing those supplier relationships. And then those companies with which you have the best relationship, oftentimes they are going to offer you good candidates in order to convert them to a payment type that might be a target payment type of yours. And then just to see where we're going, I'm glad to see some of those key elements identified. Deeper, more agile analytics and reporting. Again, this supports the business hub. I think enhance more collaboration with key stakeholders. I think that is key as well. and smarter systems that drive greater efficiencies. I think that speaks to the fact that we're realizing that we need to look towards solutions that offer automation and other pillars of strategic value, and then the eradication of tactical tasks, which is really key. And what automation does is it really allows us to offer more productivity if we erase those tactical tasks. One of the things that was really enlightening to me, this happened for me several years ago, but if you've never gone into the weeds of accounts payable, if you start to look at all the different departments it touches, all the systems it touches, all the processes that are involved, it's really amazing, all the different areas. So really just going through and mapping that process and going through the process of just looking at how much it actually costs your company to process a single invoice can be very enlightening. To some folks, it can be a little bit scary, but it shows you the areas of opportunity in order to impact the bottom line and impact productivity. So let's talk about some common supplier relationship pain points. So we talked about good supplier relationships are key to being able to do the dance with our suppliers. If we don't have a good relationship, it's going to be very hard for us to get let's say we want to convert our supplier from a check to ACH. It's going to be hard to get them to even listen to us if we have an acrimonious relationship with them. Well, sometimes these acrimonious relationships are caused by inherent barriers. Some of them are technology, and some of them are processes, and some of them are our controls. A lot of systems, you have lack of visibility into your supplier activity. Sometimes there's an asymmetry of information in terms of invoices, what's owed, what's not owed. You might have disputes because there's not your supplier might not have access to the same information that you have. So some of the AP automation suppliers support supplier portals, which provides that symmetry of information, and then also allows you to be looking at the same thing, and also the visibility allows you to be proactive in managing relationships. You can see potential issues as they arise. Reporting can give you trends. Are there going to be issues? Are there issues in terms of really understanding what your supplier is owed, and discounts taken, discounts missed? We can have collaboration barriers. Sometimes just given locations and that access to information outside the office can have untimely communication. And again, there's just relationship constraints. So if you're going to be ready to do that dance, we have to have our house in order. And having our house in order very well may mean a comprehensive AP automation solution, which obviously encompasses payments optimization as well. But we'll talk about how AP automation oftentimes alleviates these supplier management pain points, of course, in addition to the other benefits that I mentioned. But again, this is a key pillar to being able to do that dance and convert your suppliers to those electronic payments. So just some of the strategic outcomes of AP automation, I just kind of teed that up. The ones you can see, there's several there. So if you haven't gone through the project or process of AP automation, these are some of the pillars of that business case. And most relevant to our topic here today, we talked about improving supplier relationships, and then that visibility allows us to capture discounts, which is extremely valuable, and also gives us the ability to possibly negotiate those discounts as well. And then being able to process invoices in a timely manner is obviously going to be able to allow us to take discounts and negotiate discounts. And then the other thing is AP automation often mitigates payments fraud risk exposures when we are removing manual processes, maybe removing systems and changing processes as well. And what we'll see a little bit later is that payment risk exposures vary by the type of payment, and it is clear that the type of payment which is the most risky is very much still that check payment. So that needs to be a consideration as well. So when we're looking at how to optimize our payments portfolio, we will want to look at cost, of course, but we'll also want to look at risk exposures, and we'll also want to look at control as well. So just some of those strategic outcomes of AP. Again, We want to be ready to dance. We have to have that good supplier relationship. We have to have that visibility into opportunities that we have to negotiate those discounts and give us some flexibility in really offering value to our suppliers. So how can we offer value to our suppliers? The more we offer value to our suppliers, the more receptive they're going to be to listen to us, as we, in most cases, are going to have to educate them in terms of the benefits to them in receiving electronic payments and helping the folks, our colleagues on the other side, maybe get over some internal hurdles that they might have as well. But again, I failed to mention, first and foremost, we have to have the culture ourselves, right? So we have to be able to process the types of electronic payments that we think might be the best for our company effectively. Part of that may be AP automation. So we may need to put some programs in place in order to allow us to optimize our payments. So for example, we'll talk about this a little later. We might think some commercial card program may offer us the best value as a payment type, but it might be the case that we need to adopt that program, tweak a program, and sell that internally, get that going, and then figure out, okay, how do we push that electronic payment type, and how do we optimize the number of companies that we have in that program. So just to put some, again, if you might be looking at AP automation, just to kind of set the stage, just some of the real value here. The business case is pretty easy. Again, from Ardent Partners, cost to process a single invoice. You see a $13 difference. Huge time to process a single invoice. Again, that gives us flexibility in terms of discounts taken, discounts negotiated. We can see straight through processing. What would that mean? Automation in general, and then work with suppliers that submit invoices electronically. That's a huge benefit to us, and that's some of the education that we might have to do as well. But we also, on our side, we have to be able to use that information, right? We need to be able to accept those invoices electronically, read those invoices, get them into our system, help on the, have some good remove manual processes, and all those, and also link to PO. So we have to be ready on our side as well. So just, I think, some pretty interesting color. So I'm going to go ahead and launch our first polling question today, asking you where you are at in the process of AP automation. This is going to help me kind of frame some of my commentary, so I will know how many of you are already in that AP automation arena and experience, and might just be looking to, okay, how do I do the dance? Am I ready? Are there things that I need to do on the AP automation side to do that dance? How do I engage my suppliers? And others of you, you just may be at the point where, okay, I need to do this comprehensive AP automation project, which is going to encompass obviously the payments optimization, and it also might include choosing a partner who is active in helping me convert my suppliers to electronic payments, which can be a big component of the value proposition in your solution provider that you are going to choose. So I'm going to go ahead and I am going to close the polling question here in just a few seconds. Again, those of you who might be interested in CTP credits need to answer the polling question, and then we will get back to our content, and then we'll talk about some more areas where you might not be ready to dance. So we might look at some of those common payments pain points. So we'll look at, okay, where are there some other areas where we need to make sure that we are ready to do that dance. So let's go ahead and I'll close that, and let's go ahead and share. And so we see 33% of you are implementing or have AP solution, 27% the discovery phase, great, 11% currently evaluating, and 22% I don't know or NA. So those of you in the I don't know or NA, I hope that the action from this webinar is for you to make a phone call, walk over to your accounting manager, your AP manager, and see where you might be at, because that's really going to set the stage, as I mentioned, for this ability to optimize your payments mix. And so 33% of you implementing, so a third of you are kind of probably a little bit farther along the curve. So we'll focus just a little bit more and make sure that we are mindful in really mentioning that AP automation, and that AP automation project is potentially a part of being able to optimize payment. So let's go ahead and hide that. And now let's go ahead and take a look at those payments pain points that we might have. We talked about visibility. So it's possible that we don't have visibility into our discount. So that's obviously a pain point. We're losing money, losing discounts. Vast majority of the time, it makes sense in order to take that discount. And then if we have untimely information, we can have a poor cash forecast. And so that cash forecast can lead to ineffective working capital management. We might not have a good idea of when these supplier payments are coming and the amount of them. So it could be the case, especially if we're a net borrower and we're going to get hit with some big expense, which is going to make us borrow money. Whereas if we'd have had a good cash forecast, we wouldn't have had to do that. Given how we process payments, that can push us towards costly payments method. If we have a culture of only writing checks and we just accept checks, if someone says we want a check, we always do a check. That can make us have costly payments method. And then depending on the systems that you have, you can also have cumbersome controls in your workflow in terms of getting payments set up, and cumbersome controls in reviewing issues that are coming up. So again, another point around being ready to make that dance, and you won't want to see if you need to remove these pain points in order to unlock those opportunities. So now let's get back to, I apologize if some of this is a little bit basic, but I really need to go into this level of detail as I talk about and really get into optimizing the payments portfolio. So just payment types, I'm sure it's not new to those of you on the webinar. Obviously, we have checks, electronic payments, ACH, Fedwire, wire, and then the last category is commercial cards, which captures quite a few, can capture quite a few flavors. There's been a lot of, I think, development, adoption, especially in the virtual card program area. So just for the sake of argument for review, just to let you know, there are these different types of cards, and then these types of cards offer different benefits, different rebates, and then the benefits to your supplier, that your supplier is taking one of these cards, can be different. We have purchase cards, which are often leveraged for low dollar purchases. Corporate cards are often business travel, T&E, fleet vehicle, fuel and maintenance. We're seeing more a single-use card. It's a type of virtual card account. A supplier receives a one-time virtual account number to effect payment for an invoice. And then a flavor of virtual card program. Option allows a straight-through payment through the card network or issuer where both parties are members of an electronic payment network. So really, what we're going to see when we talk a little bit about later in collaborating with our AP automation, ePayables provider, is that a lot of these providers are owners or key partners in these payments networks, and getting suppliers to join these payment networks is really going to be able to fuel the benefits to them in taking these types of electronic payments. So what we'll see is that we're going to look at maybe the payments mix. So it could be that your first step is going to be, okay, is it check versus electronic payment? And so that's kind of the first hurdle. So you might say, okay, these are my targets I want to convert to electronic payments. Where does that make sense most? And then based on the characteristics of your suppliers, okay, this might be a group that we might want to convert. Might want to look to some type of commercial card program. So how you devise your target portfolio mix can be dependent. It depends on how ready you are to dance, right? How efficient you are in processing the different types of payments that you would like to make. And then on the other side, your suppliers, how advanced are they in terms of maybe electronic exchange of invoices? What is the culture there? And then, of course, I mentioned earlier, what is your relationship with your suppliers? Is that a good relationship, productive relationship? Are you a partner to them? So let's just take a look at the B2B landscape. One of the myths that we have is that companies want us to pay by checks and they'll only accept checks. But I think you'll start to see more and more that I'd like to see the number lower, but that number is actually less than 50%. And we're seeing ACH. Wire is pretty expensive, so those are really special circumstances. And I think what we'll start to see, even though there are still, it's the hardest hurdle to get over is to get folks on those commercial cards, but I think we'll start to see that later. But again, I think one of the myths is that we really don't have any control over how we pay. So our supplier asks us to pay by check, we pay by check. And then let's talk about this. One of the reasons that they want to be, one of the reasons historically that they've wanted to get paid by that check is oftentimes they're interested in that remittance information that goes along with that check, which allows them to have an effective cash application, because that can be a tremendously cumbersome process. And also, I think there's a myth out there that checks are not as risky as the other payment types. And so we'll talk about those, but it's just interesting to me to get a look at the B2B payments landscape. Again, that's from the PayStream Advisors Report. Again, a tremendously insightful read. So now let's go to a polling question and get a sense of how the audience, how you are making your payments. So I appreciate everyone's consideration in taking all of the polling questions, answering them. Those of you who are interested in CTP credit, you'll have to answer all the polling questions asked during the webinar. I want to remind you that we can take your questions at any time, and we will get to those during the Q&A session at the end if at all possible. So in order to be mindful of our time, I'm going to go ahead and leave the polling question up for another 10 seconds or so, and then we'll take a look at payment costs by payment type, and then we'll start getting into your payment method portfolio, how you might go about, if you don't have a focus on that, how you might go about looking at that, getting visibility into that, setting the targets, and actually managing that as well. So I'm going to go ahead and close the poll here and go ahead and share the results. And interesting to see that we have 38% of you by electronic payments, so that's good to see. Just a comment that those of you that are in that category, I'm sure there is still room for improvement if you still write checks, but there also could absolutely be improvement in changing the mix and maybe converting suppliers from an ACH to a commercial payment. So there's still opportunities there to optimize that payments portfolio. And then 33% majority by checks. I think the webinar will resonate especially well with those of you in that case when you start to look at the costs and the risks, and you look at the barriers that really aren't as you might think, and then you start to see how getting ready for that dance with the AP automation is, if that's part of it, is actually a pretty easy business case to make when you start to dive in there. And then we have 25% with an equal amount. So again, I think there's opportunities for you, electronic versus check, but also optimizing your mix within the types of electronic payments. But that being said, you need to examine the cost to you that it costs your company to process these types of payments. So I kind of teed myself up here. So payment cost by payment type. sending a paper check is 10 times more expensive than the internal and external costs of sending and receiving an ACH, and receiving a paper check is 5 times as expensive. So that 5 times as expensive, that's a good selling point to your suppliers. The median cost of executing a wire payment is over $14, so that needs to be almost a necessity. I always tried to minimize the amount of wire payments that we need to make. The wire payments, normally, obviously high dollar, they might want to track those. The only time I really wanted to do a wire payment was maybe if we were paying for an acquisition, something where I needed that Fed wire number, I needed that reference, I needed to track it, I needed to be able to tell my CFO something was done. And then median cost for outgoing card procurement T&E and Virtual is between $1 and $1.99. And then if using some sort of commercial card with a rebate function, the median range of rebates is between 26 and 50 basis points. So again, just trying to give you, an overall sense, but again, you still need to look at what those costs are to you internally. So it's good to have the benchmark, but it's a good exercise to go through to say, okay, how much does it cost us to process a check? How much cost does it for an ACH payment? How much does it cost from A to Z? The processing, so you have to look at all the people, processes, and systems. And so you want to make sure that you have a good handle on those costs and just not assume that your company falls into the median here. That depends on your environment. So just interesting here to see, okay, at first blush, okay, obviously it looks like we don't want to write checks, right? We want to convert people to an ACH. That seems to be the lowest hurdle. And then maybe, okay, and then that outgoing card, converting them that card, that may be a little bit of a higher hurdle. So again, that might be two separate projects, or that could be a two-step process. So getting them from check to ACH and then ACH to the card, or it might be, you might have multiple flavors, but you always want to be looking towards continuous improvement. And again, talk about this a little bit later. Some of your strategic partners offering your technology solutions, they will actually go and convert your suppliers on your behalf. But my point to that is I would absolutely want to know, as I'm looking for that partner, how they do it, so I can learn those, how that works for myself. So I'd like to understand, if they're going to dance for me, how are they going to dance for me, and how are they able to convert, so I understand that as I'm communicating with my suppliers. So let's say my partner reaches out, and then what's going to happen, my supplier is going to come back to me. So I want to make sure that I'm comfortable with that value proposition, how that value proposition is communicated. And also, I would absolutely want to potentially even listen in on the phone calls, because those supplier relationships are very valuable. So that would be a good thing to do as well before you go down that road. So let's go ahead and talk a little bit about your payment method portfolio. You'll want to look at your current portfolio of supplier payments by payment type. So if you haven't done that, interesting exercise to undergo. You're an AP, maybe you have to you'll collaborate AP, Treasury. So maybe that's a good metric to track. And then you want to take a look at, if you do that over time, have there been changes in percentages by payment types? What's driving those changes? Have we driven those? You can set goals relative to the mix of payment types to suppliers. Again, that's going to be based on how much it costs your company to process specific payments, but also the characteristics of your suppliers and the relationships that you have. You want to see if have we made changes in the payment types we've offered? Do we have a commercial program? Is that working? Is it not working? So have we offered that? What type of programs have we tried? Is that something that we need to tweak, or we need to look at a different program? And then obviously you want to look, do you have programs in place to convert suppliers to target payment types? And then look at that project, look at that team, and then how that's best done and communicated, how that education to suppliers is best done internally. And then a lot of times for modern systems, you can see all the communication that's going back and forth with your suppliers. So that's really what you want to get a handle on all those conversations. Make sure you're talking to the right person, and you need to be that strategic partner and see how you and show them how you are actually helping them implement best practices on the accounts receivable side. The good news is what you can do is you can share some of the best practices you're learning on the AP side to your own accounts receivable team. And maybe you look at this as a comprehensive project in terms of what types of payments do we receive and why do we receive. So sometimes being a member of these networks can offer value to you in terms on the receivables side as well. So just some interesting comments. So I told you this was going to be interactive. You got to be on your toes. There comes another polling question. Just want you to share with me your biggest obstacle to optimizing the payments mix to your suppliers. One could be you don't believe you have the leverage. Your company might have an aversion to electronic payments. Your folks like checks. They don't like change. Don't have productive supplier relationships, or the quality is not a focus. Your current systems and processes just don't support efficient processing of electronic payments, or you really just don't monitor or manage how you pay suppliers. Again, I appreciate everyone's consideration in answering all of our polling questions. Those of you interested in CTP credit, you need to answer polling questions. And of course, I would love to take your questions so we can have some good dialogue in the Q&A session at the tail end of the webinar. So I'm going to go ahead and close polling question, make a few comments, and then we're going to go back and look at some payment method challenges and really talk once again about getting our house in order and how we can get our house in order to be ready to do that dance. So let's go ahead and close that. Go ahead and share. And what we see is 39% highest current systems and processes. I'm a little surprised to see that. 25% do not have productive supplier relationships, and 16% don't believe you have leverage. So the 16% of you, I think that you have a little more leverage that you might think. You may be a small company and you might think I can't really push around someone like IBM or something like that, but that's not necessarily the case. So we'll talk a little bit about that. The 25%, yeah, this is where I think the automation solutions can really help. The productive supplier relationships, some of that is all about visibility and being a partner. So there has to be a program in place to manage those relationships. So someone needs to own those supplier relationships. Who's the owner of that relationship? How do we manage that relationship? How do we make life easier for our suppliers? So if you know that you have that problem, I think that's something that's definitely worth having a conversation. And part of that conversation can be that, do you know, if we have more productive relationships, we're going to be able to maybe negotiate discounts. We're going to be able to change electronic payments. It's going to save us a lot of money. And then 39% is the current systems and processes. So I would imagine most of that is on the system side. So again, this might be an area to look at that AP automation solution, looking for that right partner. So thank you very much. Really interesting results there. So let me go ahead and get back to some of our payments challenges, and this is again from the Page Team Advisors report. It's just interesting to look at the challenges internally. So it looks at whether the company is a strong proponent of checks, cards, or ACH. What are those payment challenges that we have? High processing cost. I'm a little bit surprised that checks is low there. I think that's because they don't realize how high the processing costs are. Loss from fraud, checks. So that's interesting because it seems like that's a challenge. So they know that's loss from fraud. It's a high risk, but then there doesn't seem to be an onus to change that. Duplicate payments, checks is 0%. I find that relatively interesting. Missed discounts, again, we look at checks. So what we'll see is, strong proponents of checks will see more and high percentages of all of these challenges that we have. So just to take it back to an automation discussion, automation can help mitigate costs. We talked about high processing costs. It can help mitigate fraud, can absolutely help mitigate duplicate payments, helps us alleviate late payments because we have visibility into when payments are due, but we also have the ability to make payments in a timely manner, right? So we know it takes us 12 days, 13 days, so we start to track and we schedule payments. We need to make sure we can get those payments. Missed discounts, automation gives us that visibility. And then employee confusion about the correct payment method to use. That seems to be is going to be a training issue, and that can actually be automated in some way in your system by your supplier. So your supplier should be set up in your system. With some of these AP automation suppliers, you actually send one file with multiple payment types. So there will be a default payment type associated with your supplier, so we wouldn't have to worry about that. And no payment management challenge. I find it funny, 0% of the checks. So just some interesting things. Again, spending a lot of time here on getting ready for the dance, but I think that is probably the most important part, or at least equally important as educating your suppliers in terms of the benefits to them. So let's go ahead and talk about. So we talked about, again, automation, last slide, issues mitigated, payment methods chosen not cost effective. Automation can help us more cost effectively do electronic payments. Automation can help us standardize processes across payment types. It can make it easier to have payment controls and enforcement. And then payment exposures that are unchecked are unknown. What we'll see in a little bit is that checks, we mentioned checks are definitely have the highest risk exposures. Now, polling question, oh yes. Next polling question, how would you characterize the level of control your company has relative to how you pay your suppliers? Virtually none, just pay how they ask. Some, you may actively try and convert suppliers to electronic payments. Quite a bit, you've converted most to electronic payments. D, it's as much as possible. You have a strong focus on your payments type mix. And then not available, you really don't focus on how you pay your suppliers. So in order to be mindful of our time, I'm going to go ahead and leave the polling question up for another few seconds. And then we're going to transition over towards the benefits of e-payments. So internally, if there's any aversion to e-payments, give you some ammunition there. Let's go ahead and close the polling question. Okay, and real quick on the results, and highest is 40% of you, so you actively try and convert. So hopefully we will have offered you some tips in how to make you more successful. A little higher than I would have expected, 25%. You've converted most of your suppliers. So I would be interested to have a conversation with you offline and know how you've been able to accomplish that, so I can share that in an article that I would love to write, because I know many people struggle on these conversion tips, even though much more, and there's many more than the ones that I'm going to offer you as well. So thank you very much for answering a polling question. So now let's just talk about real quick. Talked about all these. We're going to touch again. It's just more, just adding some shoulder behind what I talked about. The benefits to your company in terms of e-payment. So if you have that culture, good slide to print out and share. And then the benefits of sending or receiving e-payments, just the realized, and this is talk about receiving payments. There's cost savings, improved cash forecasting, more efficient reconciliation, straight through processing, working capital improvement. And then so this would be a good slide. So these outlines some of the benefits to your suppliers as you're trying to convert them to e-payments. So again, part of that value proposition, and then you have to know the value proposition, you have to communicate that effectively, you have to dance effectively depending on who your partner is, and make sure that you have that good relationship with them in the first place. And then go over some of the myths. Electronic payments risk exposures are more significant than checks. Customers are unwilling to convert to electronic payments. There's an inability to link remittance and electronic payments. There's a lack of remittance information with financial systems. Converting to e-payments and managing and leveraging it will require significant IT resources. So again, a big concern on the customer side is that that there's this inability to get that remittance information, get that information, integrate it, that straight through processing, so it's inefficient. So those are some of the myths. Big myth on, if you look at the 2017 AFP Payments Fraud and Control Survey, you will certainly see that checks are still the biggest focus of our fraudsters, 75%. And then the next highest one we have is wire transfers. So ACH are still relatively low. So, and if we were to look at this across company size, we would see that their checks are still absolutely the target, and they're the target because they're most successful. And then I talked about the myths that they're not receptive, to electronic payments. You look at again, Page Team Advisors report, request, supplier request. We have, some requests for wire, 34%, 35% ACH, and then look at that check percentage isn't all that much larger, but we still have many checks. So I think what this is showing us is that suppliers are definitely more open to electronic payments, and they actually are more often requesting electronic payments as well. So that, I think that really puts that myth to bed. And I think a lot of the concerns, for me as a Treasury person, my first one will be the remittance information. And once you get me over the remittance information, for example, for an ACH, I'm going to be pretty receptive to the rest of our conversation. So realities: risk of payments fraud is less with electronic payments. More and more companies prefer them. Technology can automate the remittance, link it. There's technology where a rules-based engine can automatically match payment to open invoices, and there's SaaS-based solutions that result in minimal overhead for the IT department. A cloud-based solution really addresses those concerns. Supplier e-payment benefits, so communication. These are the benefits you'd want to communicate. You receive, obviously, they receive payments more quickly, improves their cash flow, facilitates more effective working management. They can receive detailed remittance information, which lowers processing costs. In some cases, for companies receiving payments, a lot of that cost is coming through lockbox costs for checks, and that can be really tremendously mitigated. And also that integrability allows that cash application to happen automatically. Just talked about that. Eliminate process inefficiencies caused by manual process, inefficient exchange of information. We can have increased security and controls, the easier reconciliation, and then the ability to, if you're in these portals or you share that information, a common portal potentially give your suppliers access to a certain system. The ability to track payments allows improved cash forecasting on your supplier side as well. So you can see that there is definitely a business case on the e-payments, but again, in some part it depends on the cost on your supplier side on the receiving the payments. And just to dig a little deeper here on commercial cards, we're seeing a lot more attention paid to commercial cards. So I wanted to just touch on commercial cards a little bit deeper. Just some information: have one or more commercial card programs in place, 67%, 12% evaluating, and 21% do not have one. So let's just go ahead and ping my audience here real quick and see where you're at in terms of having a commercial card program. So again, I appreciate everyone's consideration in answering all of our polling questions. And those of you interested in CTP credit, please answer all of our polling questions today. I want to remind you that I can still take your questions in the questions area of your GoToWebinar control panel. And so I'll go ahead and close this and take a look at the results, which are actually pretty surprising to me. So 75% have one or more commercial cards, so that's a lot higher than I thought. Interesting follow-up would be more maybe a one-on-one conversation about you have one or more commercial cards and what is the value that you are receiving, and then as we start to dig a little deeper, a subject of another webinar would be what are the adoption rates among the commercial cards, and then how are folks able to get their suppliers converted to those specific types of programs. So just taking again a little bit of a deeper look, if we want to take a quick look at obstacles for card adoption, internally, our folks might not want to adopt this, but with our survey, you guys already have these. One of the big ones here is that supplier resistance. And again, we've been talking about that, communicating those benefits there. But this is a little bit of a tougher sell, given the cost that they often incur by those commercial cards, and looking at that cost and figuring out a way to do that, to maybe share that cost in some manner. The good news is some survey results from our partner, Mineral Tree. There are commercial card benefits, specifically better cash flow, extending payment terms, cash back and rewards, better timing of payments, capitalize on discount opportunities. But again, it's really related to the magnitude of those benefits of your suppliers. So it's important that they understand how much it costs them to accept those payments, and then what are the benefits to accepting those payments as well. And then just kind of the lay of the land. I attended a very interesting session on commercial cards, the good, bad, and the ugly, which had a key speaker from our sponsor. Very, very interesting. Commercial card payments have clear benefits to suppliers. And this is interesting. Vendor payments on virtual cards are projected to grow 23% year over year. So that's good. However, there are higher costs to suppliers, often limits the opportunity. The market at large is inefficient. That would be kind of the ugly. And then some of it, not my audience here, but your company needs to adopt a commercial card program. So again, just digging a little deeper there, just because I've seen more focus there, and that session that I saw at AFP was really compelling to me. In terms of overcoming e-payment adoption obstacles, if you need to have effective and efficient processes in order to support payment types. We got to be ready to dance. We got to be a good customer. Before we dance, we have to communicate the benefits to suppliers. A few of those: faster payment times, more secure and accurate payments, possibly working with an e-payable solution provider, maybe a multi-stage phase-out program, and then if you have this leverage, specifying the electronic payment within supplier contracts. So these are specific tactics. And then just kind of pivoting a little bit towards partnering with AP automation / e-payable solution providers. Some of the benefits that they offer, some of the ways that they help you facilitate better supplier relationships and gain that adoption. They offer supplier data management. They try and get suppliers to enroll into programs. It can help streamline the payables process, where you can send one file to them. Again, they will convert suppliers to electronic methods. They take ownership of that supplier education. Again, in the case where you have the acceptance, it improves working capital by speeding up your payments processing. It can give you more control over your payments with that success. And then remittance details are transmitted automatically, so vendors know when, why, and how they've been paid. So again, if you're looking at that dance, you have to be ready. You have to be absolutely ready for that dance. You have to have your ducks in order. So you need to be ready to dance with your suppliers. What does that mean? Efficient processes and technology to support desired payment types. You have to be in position to have the efficient exchange of invoices and related remittance information, an environment of proactive supplier relationship management, and then you need to have an understanding of your supplier's cost of accepting different payment types. And you need to know how to dance with your suppliers. So what is that dance? And that dance is going to be different depending on which type of payment you're trying to convert them to. Communicate an understanding of your supplier's cost of accepting payments. Identify conversion type that makes the most sense. Check the ACH, check the commercial card, and then communicate the benefits to converting to a desired payment types. If at all possible, understand what their objections might be and see if you can disarm those up front. And then you might engage that ePayable's AP automation solution partner to do the dance on your behalf. And then things we talked about in the last slide, these are things that they're going to be doing to help facilitate that conversion. So just want to share with you some additional resources. Again, I think it's important that we supplement the content here today. We certainly haven't covered all the bases. White papers, payments automation, the value of optimizing payments, the Ardent Partners studies, PayStream advisors, AFP payment cost benchmarking survey, the state of e-payables, strategic advantages of AP automation. Again, a lot of great information out there. If you're looking to, I would say in majority, it absolutely makes sense. In majority, probably in all cases, optimize your payments, and the technology and the right partners are out there to help you do that. So I've got time for a few questions, Q&A. So I'm going to go ahead and address a couple of our questions here, and then we're going to go ahead and wrap things up and have a few closing comments. So, so someone is a couple questions around how do I build internal consensus if I am going to need to convert even more of my suppliers from checks to electronic payments. So basically, how do I get even more of my suppliers from checks to electronic payment? So I think that is really a focus on the education side. So just take a look at all the suppliers you're paying by check. I think it's worthwhile to find out the reason that they're asking to be paid by check. And then identify with maybe the person that's managing relationship. What is the reason? What is the hurdle there? And then I think you'll start to identify opportunities for low-hanging fruit. I think what you'll also want to do, and now with the data and tools that we have, just be able to really print out a list of companies that you're paying by check, and then look and see if there are common characteristics, and then maybe identify some low-hanging fruit as well. And then in terms of internally, consensus just from engaging in an AP automation project or kind of an add-on as that payments optimization is to really engage the folks that are going to be impacted by the project. Go and ask everyone involved in a process what their pain points are. How can I make your life easier? And then you'll have that answer. Or what you can do is softball and say, hey, I was just on this webinar talking about AP automation and payments optimization. I thought it was really interesting. Do we have these issues? How do we address these issues? Are there ways that I can help us mitigate these issues? Have we looked at AP automation suppliers? Is that something that we need to take a look at? So with that, I'm going to have to close our Q&A session in order to be mindful of our time. I'm going to go ahead and launch the final polling question as I make my closing remarks here. I would like to once again thank our webinar partner, MineralTree. We appreciate and share their commitment to thought leadership, which is also very evident in the great content and resources they offer, which you can review by visiting the MineralTree website. I'm going to go ahead and give you a few more seconds here. And then I'm gonna close that polling question. If you give you the 5, okay. And finally, a big thank you to the audience for your valuable time today. Make the rest of your day great, everyone.